Welcome to Revenue Search. My name is Mark Creaser, co-hosted by Siam Kid. This is the Bitensor podcast that is in desperate need of a new intro video. Why can't I hear you? I think this is desperate need of a new microphone.
You would have thought after 42 episodes, I'd know how to unmute myself. Sorry.
Unbelievable. Unbelievable. It's Friday though. How are you? How's your moth situation?
My moth situation, there are no moth bites on this one.
People will be wanting an update, desperate for an update.
I know. I'm brokering up at the moment. I'm run down this week, so I've got nuclear juice here. My wee's gonna look funny, but yeah.
Good. Well, thanks for the update on that front. This is our first of two revenue searches today. Quick promo for our later revenue search, where it's just me and you. We're not even going to pretend we've got a guest.
Oh shit! I completely forgot about that. But yes, we've got a lot to talk about on that one.
So we need to make much more talk on this one because we've got like an hour of just me and you later.
Yeah, let's do it.
So without any further ado,
let's bring on Victor.
Let's bring in our guest for the day.
A proper big dog. So, like, we were joking that DSV originally started out as a hedge fund. So we're like, hey, we want to bring money in, help buy subnets, yada yada yada, and then we sort of like accidentally turned into like a very mini part-time VC firm as well. So we thought, let's get a proper VC on Victor. And this is Victor from TAO Ventures. So who are you, Victor? What is TAO? GTB?
Yeah, no, pleasure. Thank you so much for having me, guys. Really appreciate it. And yeah, I think it's quite funny. I think you guys came in as a hedge fund first and became a VC in Bittensor. We came in as a VC and now have become an operator. So it's a funny world that the Tensor kind of, you get an input and you get an output, right? So yeah, maybe in terms of just intro, I'm Victor Teixeira. I'm the Chief Investment Officer over at GTV. Originally, we started off a fund called Contango Digital. And this was a small $10 million fund specifically focused at the intersection of blockchain and AI. And this was started by Mike Grantis and Josh Field. And really, they were the first guys to kind of start going in this direction of that intersection in the early days. And this was early 2022, 2023 was really when the idea for the fund started. And from that, it really kind of kicked off into a process of where is the interesting projects at the intersection of crypto and AI. And Bitensor came up pretty early on. And the funny thing was that given the rules on the VC fund, we weren't able to do liquid investments. And so we kind of started looking around and said, okay, well, Bitensor is definitely interesting. We can't really invest in it directly in the fund. What else can we do? And then that's when Jordan Kotsopoulos, our COO, and Mike teamed up with the idea of what if we build a venture builder in Bitensor and use the portfolio as a top of funnel to bring teams into Bitensor. And that's exactly how we started off. So we incubated Subnet 23, facilitated a merger between two teams, kicked off Social Tensor with a portco of ours and a team that was already existing on Bitensor. And then that kind of turned into an addiction where one subnet turns into two. And so then we kicked off a red team. And then that turned into 3, where we advised for since, and then into 4, where we launched 35 with one of our portcos, which was AIT at the time when it was LogicNet. And then it turned into 5 when we decided to roll up our sleeves and build a subnet 50-50 with the Taofu guys. And so that's really kind of how we got started on the subnet side, and then slowly rolled into getting involved in the validator side. So we run the Roundtable 21 validator as well. And then the mining side, where we brought in a bigger and bigger team. So now we're fully across the stack, validating mining and subnets.
Holy shit. And so Roundtable, that's a proper validator. Like you're putting proper infra down on that.
Yeah, exactly. And that was always kind of our one of our kind of goals with the validator side. And that's why we partnered up with Adam, was that we wanted a validator operator that is actually running the inference. Because at the end of the day, I think that a lot of the outputs that we get from Bittensor depends on the quality of the validator, right? If you're doing work and it's just coming out of a wake copier's validators, the outputs are kind of anything. They don't really matter. But having that kind of certainty that our validator is constantly running outputs that do matter and are actually building the digital commodities that we want to sell out to the world, that was something that was very important for us. And so that's really where it came up in terms of this partnership, and then eventually into a full ownership of the validator now.
Amazing. So what does Adam do then, now that you've like kicked him out?
Oh, Adam is still critical to everything. I mean, at the end of the day, he's probably, I mean, we've joked multiple times that Bittensor is not even proof of useful work, it's proof of Cappy sometimes, where he is able to see some of the issues that nobody else sees. And honestly, he's an incredible validator, and we couldn't do what we do without him. Like, honestly, is the backbone of the team and all the efforts there.
Wow. So what's on your plate at the moment? What are you chewing?
Yeah, so right now, I think the big one that I'm guessing people are going to want to hear about is Cartha. So Subnet 35. That's been one that we've been working with Taoshi, Subnet 8 in partnership that we've been developing. So that's our FX perp DEX built on Bittensor for specifically for foreign exchange. We brought in a CEO of a regulated CFD broker to run the front end of the application. And on the back end, the goal is to turn the Bittensor subnet as a liquidity as a service engine, where we use the incentive mechanism to bridge the gap between the bid and ask of liquidity providers and traders to attract them both to the platform and kind of kick off the flywheel that way. But I can go into more detail on that. That's one thing that we're working on. And then another one, which I'll actually, I'm not allowed to make that announcement yet. I'm under embargo. So that one I'll skip.
Well, Mark is a bit of a professional with stuff like this. So go for it, Mark. What questions do you have for?
Well, I mean, there's so much to dig into, isn't there? What does your typical day look like, Victor? What do you do, Dave? What apart from revenue search, what else is on the agenda today?
Oh man, revenue search was the most important thing. So I cleared the calendar for this. Was available for the rest of the day if you guys want me, bro. I can join in later if you're missing a guest. No, but in all seriousness, it's a pretty intense day. It is pretty fun. I used to be an investment banker before in a previous life, so this is actually a step back from that world in the sense of I think the intensity is the same. The enjoyment's a lot greater. And really, it goes from talking to portfolio companies on the fund side and kind of seeing where we can help them, talking to teams and helping them develop incentive mechanisms. That's kind of been a little niche that I've kind of enjoyed of kind of digging into how do you actually find the right incentives, where are the good push-pull mechanics in the ecosystem. And I think especially with DTAO, we need to be a lot more aware of alphanomics and on kind of how the push-pull mechanics work in how it makes sense and in how you're taking this product to market, where are you actually going to make that revenue. And so that's a big part of my day as well. There's a lot of just kind of organizing, kind of working through with the tech team on our side of the technical stuff. I'm dangerous enough just to annoy them and understand enough of the tech side so that they're like, oh, we would really wish we didn't have to answer that question. That was a bit silly. But yeah, that's my days. A lot of kind of just jumping around wearing different hats and kind of finding different opportunities in the ecosystem.
So, in terms of supporting subnets, how hands-on are you or you as a team with supporting those 5 subnets?
Yeah, well, I'd say we're relatively hands-on. I think it kind of varies depending on the life of the subnet. In the early days, a lot of what we kind of focused on in terms of our strategy of bringing teams into Bittensor is, and as we always say, if we find one team that is 10 out of 10 Bittensor, but 5 out of 10 on the idea, or one team that is 10 out of 10 on the idea and 0 out of 10 on Bittensor, we're going to go with a team with no Bittensor expertise every time. And the reason for that is that really the thinking that we've had in terms of how we built the team is that we have very, very experienced Bittensor engineers, and then we partner up with subject matter experts. And so when we do that partnership, we're able to essentially say, look, we bring all the Bittensor, you bring the subject matter expertise, and then we're actually able to make it work. So for example, I think Red Team's a great example, or even TPN, where Red Team, they had all the experience on the bot detection, all the experience on the Red Team kind of like mechanics of how they wanted to build that and how they want people to break their bot. Candidly, we have no idea how that works. We're not experts in that, but we know how to do Bittensor. And so what we did is that we were able to bring the subnet expertise and the ability to get to a subnet I think we did that one in 60 days, if I recall correctly. And they brought in the subject matter expertise, and then that's really how we've been able to launch the subnet. And similarly with TPN, we got lucky enough to partner up with the Taofu guys, where Mentor had already built two VPN businesses previously. And so we were able to just say, look, we can do the Bittensor side. You guys do the actual subject matter expertise, and then we're actually able to get to the subnet much quicker.
And how do you structure that partnership with a subnet? Because, candidly, our our thesis changed, didn't it? We were hedge fund, then we were kind of VC, and the VC was like an OTC situation. But now we're much more interested in delivering non-capital value to the subnets that we partner with, and building for kind of long-term alignment rather than, "Oh, we've just done an OTC deal." But you've got a bit more experience there, perhaps. So talk me through your curve.
Yeah, no, so I think from our curve, it really started off as we came in as a JV partner in the first instance, and then it kind of evolved into becoming a bit more hands-on to the point where now we are building our own subnet with 35. So the curve is very much, and I think you're probably on the same trajectory at a certain point where we just started a step ahead of you at VC and started getting into the
Yeah,
operator
we want
side.
to be operators too.
Yeah, exactly. Yeah, from us, it was really just rolling up the sleeves, getting stuck in, and then when you kind of start doing it, right, it just kind of naturally flows on from there. And then you see, hey, look, you did one thing on one subnet. Hey, that would work really well on this other subnet idea. Or, hey, I've had this grain of an idea that's been sitting in my head for the last few months. One of our subnet slots popped up and became free. And we're like, okay, let's go ahead and build that. And that's kind of how Cartha came about, where both Arash and myself kind of had a similar idea in parallel, and then the ideas merged, and we're like, this makes a lot of sense, and let's go out and build this. So it really depends on each subnet, but I think from our side, it's always been something where our whole business has been built on JVs and kind of finding those partnerships with really, really great people across the ecosystem, whether that's Adam, whether that's the Taofu guy, whether that's the red team guys, or Taoshi, or any other one of our partners. And then figuring out, hey, how do we actually get really stuck in where all the incentives are aligned? We're on the ownership key like everybody else, like a subnet owner. And then we really go from there, where we're actually putting the dev time and the resources and the time thinking on how do we build the incentive mechanism? How do we make sure that this is resistant to exploits from the miners? Does the outputs from the validator make sense? All these kind of things that we stack together. And by having that holistic view, I think it simplified a lot of our process, because we don't only think about a subnet from the subnet side, we also think about it from the mining and the validating side, and really how does all of those three pieces fit together to make a subnet that's actually commercially viable.
Yeah, but so you see yourself as aligned in like an ownership position with the owner key emissions, not like an investor, but more embedded in as part of the team from a strategic perspective.
Correct. And I think from our side is we just find the capital efficiency for us is greater if we spend the money investing in the staff that comes in to build the subnet, rather than just coming in and buying the tokens over the top. And that's really been the goal for us so far.
Yeah, we're definitely on that same journey.
Well, I'll let you know. I'm out here testing the waters for you guys. So
Oh, okay, so that's interesting. So where on your current thesis then, where's the ecosystem going? What's
yeah, I think detail is very interesting. I've been saying this for a while. I think in detail, you need one of three things for it to be successful. You either need to have external revenues that you can tie into your alpha token. You either need to have captive demand, which are users that are holding your alpha token to access some good or commodity that's being provided by the subnet. Or if you're a research subnet, you must be willing to spend the capex, where essentially you're subsidizing the rewards emissions by yourself just saying, I'm going to spend 250K of capex every quarter on this research topic. I think in terms of the thesis of where we are, a big thing for us has been like how commercially viable are subnets? Who's your end customer? Who's going to be buying the good or service that you're providing through the subnet? And then also having more and more now, we're really focusing on the alphanomics side of the fence. And I think subnet 35 is really one where this is going to be, think, maybe the first proper like tokenomics structure for a subnet, where what we've come up with is that the subnet generates revenues through the exchange that it runs. So miners, there are two types of miners. You're either an LP miner where you're providing liquidity, or you're a trader miner where you're trading. And so those are the two things that we're incentivizing for. So we want people to provide liquidity and we want people to trade and use that liquidity. That action of trading generates fees. Of those fees, 50% of it gets sent back to the miners, the LP miners directly. And of the remaining 40%, that goes to alpha token holders. So you can vote escrow your alpha tokens. So lock them up in a vote escrow contract similar to Curve. And then you'll be able, every epoch, which right now is structured to per week, you'll be able to claim a USDC dividend on those vote escrowed alpha tokens, depending on how big your vote escrow bag is and how long you vote escrowed for. Gives you a bigger vote escrow score. And so this one now creates an interesting mechanic where on one hand, the miners are getting rewarded in both the trading fees and the alpha emissions. But then the alpha token holders are also earning a portion of those trading fees, which means that the miners are incentivized to vote escrow their emissions. Speculators now have access to the benefit of the subnet by being able to go out and buy the alpha tokens and vote escrow them and earn those fees themselves as well. And then traders are also incentivized to lock up their emissions so that they essentially get what's a rebate on their trading fees through the fee dividend. And so that's really the approach of how we're trying to build this kind of more dynamic tokenomic system. And that's really where I think we see the space going, is that we'll need to have much clearer and much better tokenomics for subnets that just kind of create these sinkholes where, for example, in this case, one sinkhole is that miners that want higher rewards, they'll lock up their emissions rather than selling them. Stakers that have their emissions that are holding their alpha tokens, they'll want to vote escrow their tokens so that they can earn that share of yields. And then traders are doing the same. And so this already removes quite a bit of the sell pressure. And then fundamentally, it all comes down on, can you make revenue or not? And as I've said in a few forums so far, like candidly, if we don't make revenue, the alpha token should go to zero, right? But the goal here is to really tie it to the revenue, and is our product working? And that's really kind of the goal on 35 with the tokenomics.
Yeah, tokenomics or alphanomics are fascinating, aren't they? And there's been an evolution from kind of like, we've got no idea what we're doing. Buyback-and-burn is the default to, okay, we can do something a bit cooler here. We can do something that's going to be a bit more effective. That sounds like an interesting one there. You got on 35.
No, appreciate it. And I think I agree. Like, I think buyback-and-burn makes a lot of sense, right? I think fundamentally it's the same as the mint and burn equilibrium that we used to see on Helium or other infrastructure-based networks previously. That's a perfectly fair mechanic for some subnets. I think if you're selling to fiat revenues, mint and burn equilibrium is a great way to do it. Price yourself in fiat, burn the equivalent amount of alpha, and then it will balance itself out. If you're emitting more than you're burning or vice versa, that will dictate the price curve. But I think it's getting to a point where we need to start thinking beyond that and kind of figuring out, hey, how can we create these kind of incentives where even speculators can benefit from it, and it can benefit from it to hold on to it for the long term rather than just trying to time when those buyback and burns happen, where they can pick up that step up and then kind of exit the token.
Yeah, I like that. What do you think of that, Simon?
Oh, I've got loads of thoughts, loads of questions. Like with the alpha burning and stuff, I've always thought, yes, it's a very crypto thing. Buy back and burn, just burn the crypto, lower the circulating supply, everyone wins, right? But from a business perspective, and Mark and I always look at subnets from like a traditional business perspective. I guess you do too. You're an investment bank, and I was thinking there must be a better way than just burning the tokens. So let's say it was my business and I made a load of revenue. I bought back my alpha because I want to do that. I want to drive value back to the alpha. But then the thought of just let's say it's $1 million, just burning $1 million. I was like, so two parts of my brain thinks, one, how can I use that $1 million to grow my business faster? So next week or next month, I can burn $2 million or buy back $2 million, etc. So I always want to grow the business. But the second thing is, instead of burning, I personally would like the negative connotations of not burning it to go away. Because at the moment, I think a lot of subnet owners don't want to burn it, but they're like, oh, I'm gonna have to burn it because that's what everyone's expecting of me. It would be much better to buy back and have an alpha treasury. Because when you look at the compounding interest of alpha, it compounds per day. Like when you do the calculations, like if you like spitballing some numbers here, if you have a subnet that's like an 80% APY average, over 2 years, you're doubling your alpha pot. Over 4 years, that's another doubling, roughly. Like over 4 years, obviously you have the alpha halving, but long story short, you're like quadrupling your alpha. So if you're sat there with 100,000 alpha that you're about to burn, why not have a subnet treasury that over 2 years is going to double? But here's the thing. I think a lot of subnets need to start like intermingling or start using the mechanics and the pipework that TradFi is already out there. So if I'm a subnet owner and I've been buybacking, not burning, but buyback and parking in this treasury, like be Michael say, look, I will never sell this alpha, type thing. And then over 2, 3, 4 years, you've built like the compounding has just gone nuts. You can then use that value, that paper value, to go and raise money, to go and raise like actual fiat to like if you need money, like hey, we're sat here on $50 million worth of alpha. I don't know, use it as collateral or something. And then bigger things.
I think that's exactly what subnets should be doing. Like, I think at the end of the day, the big thing is if we go back to pre-DTAO, right? The mechanics of the ecosystem and why it was somewhat reticent to allow VC capital into the space was because the emissions were in TAO. So if you're building a subnet, you have the ability to essentially get those emissions in TAO, sell that for fiat, pay your CapEx, be able to pay your team, scale up your team and grow it. I think the funny thing with DTAO is because of this relationship between the alpha emission your TAO emissions and your alpha token price leads to this really weird situation where subnet owners haven't really had the opportunity to get the revenues to generate that CapEx in the first place. And I think that there's been a bit of a challenge here, especially from the VC perspective. And I think from our side, it's something that it's been, and we've invested in a number of subnets from the fund side as well. I think the challenge here was for a lot of other VCs that are not as familiar with Bitensor is that it's very rigid tokenomics in terms of the emission rates. It becomes quite tricky when comparing it to what happens elsewhere in crypto and in the rest of Web3. I don't think it's not apples to apples in terms of how you have to assess the subnet emission curves, and especially the dilution that you get on these is tricky. And then you have to kind of back solve that you're going to get essentially offset 41% of the dilution. You're getting that yourself as the alpha token holder, but then the rest of it is actually real dilution. So it's a bit of a weird play there. But I think that the big challenge here is that subnet owners haven't had the ability to scale up their teams or grow as fast as they did pre-DTAO. And I think that a big part of this is that we now need to get a bit more creative with how we're able to actually get, exactly to your point, the liquidity on what's on the owner key, right? And I think that there's a number of ways to do this. I think lending and borrowing is something that is definitely going to be needed in the ecosystem, where owners should be able to collateralize against their owner key, whether that's on chain or off chain. I think that's going to be an absolute prerequisite in the short term. I think the other part to your point in terms of the buyback and burn, I agree. I think it'd be great for subnet owners to say, look, I have earned these revenues. I want to scale up the business. Maybe it's not even a buyback portion at that point, but it's something saying, look, I've earned these revenues, but I want to go put these revenues into these roadmap items here because X, Y, and Z will give me ABC in terms of revenues in the future.
Yeah.
And I think that that's a big part of that communication and that kind of process and feedback loop with the community that needs to improve. And I think it naturally will as Bitensor gets bigger and attracts more people from more traditional, either TradFi backgrounds like myself or Web3 backgrounds into the space. I think that those conversations can happen a bit more freely and then kick off that kind of flywheel of maybe I don't want to even buy back my revenue. Maybe I want to take that revenue. I've made $1 million. Well, I'm going to go hire the best engineer I can find. And now the outputs of my subnet are going to be that step change better. And I think from that point of view, that makes a lot of sense.
Yeah, and I love what Shaq did the other day. Like, he's sort of ripped off the Band-Aid and leading from the front. Like he sold, what was it, $1.4 million for growth, not for boats and hoes, growth. And I think and there were a few negative reactions to that, but I think those that had negative reactions were, I don't think they understood the full picture, or they don't understand detail or business in general. They're probably just crypto bros, and they're like, "Oh, you're dumping on my bags." But I think what Shaq did was the right move.
I agree. I think it was absolutely the right move, and I think just in terms of like big picture, if we zoom out, I think Bitensor, we have kind of two wings of thought. We have a very academic wing on one hand, which is I think it's very much represents the pre-detail world, which is very certain academic theories and beliefs on that side. And I think that, a lot of them have a lot of merit, and I always have time to listen to those. And I think on the other hand, and I think, I sit very much in that other extreme is the much more commercial side of Bittensor, where at the end of the day, DTAO does give us pretty clear push-pull mechanics in terms of how you get emissions. And exactly, it's market driven, and at the end of the day, if you can make revenues and you can drive those revenues to your alpha token, you will sit at the top of the leaderboard with regards to emissions. And I think that that's something that has a lot of merit, and we shouldn't be shying away from that. I think that's the rules of the game, and should be doubling down in that direction.
Agreed. Like I think this is what Mark and I have been trying to do, is to make the word revenue not as dirty in Bitensor. And the thing is, I love Sam at Templar. I love Macrocosmos, and I think I think there's a very high probability that either Templar or IOTA will change the world, like in a big way, to the point where we're doing distributed pre-training at a model size bigger than OpenAI, and they can't catch up because they can't just build another country-sized data center like that. Whereas once 3 or 9 can do it, it's infinitely scalable technically the way they're doing it. But let's say that's in 2, maybe 3 years. The market is the market, and so they need funding. So whoever's funding Templar, please, it's probably continue funding Sam. But but we need revenue, and we need net positive revenue. So can you cover your OPEX? Can you cover minor sell side? And can you cover just general Bitcoin sell side? So value selling, minor selling, detail selling. And then the subnet that can do that, I think I think it's going to be Ridges. But
yeah, no, I totally agree. I think from that commercial side, it's you need to get to a point where you need to be able to run a strong business. I think from the research side, and I think that's an interesting point you bring up. I do still think that there's room for research in Bittensor. I think that especially 3 and 9, what they're doing is awesome. We are mining both those subnets. We've gotten quite good at that over the last little bit as well. But I think that the big part here is that we haven't found a good model for research subnets in the long runs and tying that to the tokenomics just yet.
Yeah.
I think that there's discussions on some interesting ideas, but I think from the pre-DTAO world to the post-DTAO world, that's the clearest difference, where research subnets were somewhat at a disadvantage and have to depend on hype. I mean, it's not too dissimilar from early stage biotech in the TradFi markets, where that is a lot of it is dependent on hype. And then, if you're one of those investors, it's almost like investing in meme coins, but the only difference is that you have to read through clinical trial results and be good at the stats and understand the p-values. But it's the same kind of thinking, where there's really nothing there until there's that commercial viability in the long run. But understanding and explaining how that commercial viability comes into play, I think, should also be part of the story today of, we don't have that commercially viable product today, but we will get it through X, Y, and Z. And I think that should become more and more part of the story. But I also do think that there is a lot of room in Bitensor for these research subnets. And the ecosystem, that was one of the things the ecosystem was really good at in the pre-DTAO world.
Yeah, like Metanova could change the world. 68. But yeah, they just need a bit more time to flower, so to speak. Also, I didn't see. I've written a few things whilst we were talking. I didn't want to interrupt. I'm slowly coming to the conclusion that subnets do actually need pre-funding. So when I first saw DTAO, I was, oh, that's cool. It's like an incubator where they get some free money to build out, blah blah blah, and it's fine. But we've seen that out of the 128, yes, there are a lot of dud ones, but there are a bunch of good ones with good teams, good products. They're building out, but they're way down in the emissions because they haven't got that traction. The rubber hasn't hit the road properly, and they've got no money, and ultimately, no one is buying their alpha, even though they're good subnets. And I was thinking there are some subnets that I know of and that we're chatting with where they are somewhat marrying DTAO with TradFi, and they've entered this DTAO world with prefunding. And it's a case of, right, we want to be X position on the leaderboard, not number one, but like some hit somewhere on top X. And we will just buy back our own alpha using our pre-raised money, and we're going to stay there, and we'll keep on buying it until revenue catches up, so we have organic pressure. And I think, that will work for those subnets, and I think other subnets need to, go down the private funding route potentially.
No, I agree. I think this is something that how do I put this? I think that there has been historic hostility towards VCs in the space. I think that that's not unfair to say. But I also think that it's important for VC capital to enter in the ecosystem because VC capital does facilitate those early stages between idea to revenue, right? And I think it's unrealistic to expect everybody to be able to open up a revenue making business on day dot where, they are able to just launch a subnet and ta-da, there's customers or revenue. Because candidly, if you already have that, I wouldn't be building a Bitensor. I'd just go out and go build it and, somewhere else where if I have those customers and revenue already, might as well cream the cash on it, right? So it's one of those where we need to have a bit more support for the early stage portion of the process where we can essentially get those teams up to that revenue stage because a lot of teams, and even across Web3, a lot of teams are pre-revenue until quite late in their life cycle. A lot of teams stay pre-revenue even after they TGE, but they do have that period between initial investment and TGE where they're able to build up the product. Even if they're pre-revenue, they're able to kind of get there. Versus with Bitensor, if you register a subnet, you've immediately TGE'd, right?
Hey, you've IPO'd.
Yeah, exactly. So it's something where we need a bit more support. I think the question marks still remain if I put the VC hat on and I kind of look at this from a very analytical VC side, I think that there's a lot of questions that still remain on how do we fund subnet subnets? How do we structure the deals? What are the kind of unlocks on it? What are the discount rates that we're applying here? I think those are all questions that we don't have very clear answers to. I mean, I know at the subnet dinner that we were at together, Siam, when you posed me this exact question of what should the discount rate be, all the other subnets sort of just shut up. I look away because I have certain ideas on it just from mathematically modeling out what it would look like between now and December of 2026. So it gets to a point where you have to bridge a lot of gaps for VCs that maybe haven't done it this way before, especially in the more traditional Web3 world. But attracting more and more VCs is the right thing to do, I think. At the end of the day, that liquidity allows early stage teams to get over that first step from 0 to 1. And then once you get from that 0 to 1 point, you're able to really start running it. I think we've seen the same thing on Cartha through the development. That's been essentially pre-funded, through staff and time and effort and labor that we've provided from the Taoshi team and from GTV together. And that's really allowed us to get to the point where we've, managed to install a good leader on the 0x market side. We have a lot of the work has already been built as we go. So, and that's really what allows us to get that point where on the day that we actually open the doors and say, all right, the 0x market is open and the exchange is ready, please come deposit on Cartha. We'll now be able to generate revenue from that first day, but that's only been achieved from this investment up front.
Okay, so it's a good point, and let's bring back that topic from that dinner. If you were to go back to your old investment banking buddies or world and say, "Hey, look, Bittensor's awesome. Come and play," and they would come and look at some subnets, and then they would try and value them using TradFi methods, etc. They like using their models, like TradFi models. they would demand like a 50 to a 70% discount because of the heavy dilution. So do you have a framework that you could, share out to TradFi to understand Bittensor better if they want to, like an investment banker's how-to for Bittensor?
Yeah. Yeah, it's a tricky one. To be honest. So from that side of the fence, it comes down to discount rates and risk profiles, right?
Yeah.
It is how much risk are you willing to take on the table? At the end of the day, the reason why price is inverse to risk is because higher risk, you're paying less upfront, but the payout is supposed to be bigger, right? It's similar with any horse racing bets or any sports bets. It's the kind of the same logic. So the challenge here from a perspective of a banker of how do we get them into the ecosystem, I think that it's candidly, I still think it's too steep of a hill to climb today. I think that
At the moment, yeah.
for the moment, I think it'll probably get easier post halving, for TAO halving. I think that already removes a little bit of the inflation on the alpha token side. I think post alpha tokens individual halvings, that's when it gets a bit clearer in terms of where the inflation rates are. I think one of the big challenges as well is from a price perspective is understanding a token that is inflating at the rate that alpha tokens are inflating at is conceptually difficult. And there's a whole separate discussion I could have if I put my economist hat on of how people are a lot worse at understanding inflation rates than we think we are. It's actually something that I think that in general people don't fully understand inflation even in the more traditional world. And I think especially when you get to the point where now you're looking at 80% inflation on alpha tokens, it's a really hard concept to wrap your brain around because it's a non-linear concept, and it's also kind of an invisible inflation. So those things together, I think, make it hard today to make that argument. I think if I were to take a step back and just talk about it from first principles of how do I value subnets and how to kind of get the framework on that, I always try to get myself min max goalposts on it, right? And I say the minimum for a subnet is kind of intrinsically in my mind is what's the net present cost of the subnet. And so what I mean by that is, let's take a subnet, for example, like Templar. There's called 20 something validators on it, 230 something miners on it, right? You say, all right, at full capacity, all the miners are running H100s. Multiply that out per hour, per day, per year. That gets you a net present cost. All the validators are running the infrastructure they need to do. That gets your emissions, and that gives you a net present value of what the subnet is worth in terms of net present cost. If that net present cost is trading above where the subnet to alpha token price is trading, that's a negative trade. Obviously there's a gap there. That usually
shoots. It's like, woo.
Yeah. But shoots is quite interesting because that was a really interesting concept on this, because you have to understand the net present cost from two sides, where on one side, the validators aren't running that heavy of a model because the miners are providing the model.
Yeah.
But then the question is, how are you quantifying the cost of developing the agent on its own miner? So that's a different argument. And I think that this goes into those high margin subnets discussions that have been going on recently on the timeline. But then on the other end of the max point, it's kind of like I just go for a traditional Web 2 VC approach of, all right, what's the value per user on the subnet, right? If you're selling GPUs, what's the lifetime value of a GPU purchaser? If you're doing VPNs, what's the lifetime value per user on the VPN? Then you multiply it by how many of your users you expect there to be. And then you discount that back, and that's your upper bound. And then that at least gives you the goalposts of where you can kind of start to operate within. And then from there, you can then model out the inflation of the alpha tokens. And it's not the hardest thing to do to figure out what the inflation rates look like. It's really determined by sum of prices is the main driver on this. And then from there, you're able to essentially get to a min-max average token price on any kind of time horizon that you're looking at. But first principles right now with those 80% APYs, you are looking at 50 to 60% discounts, if you're holding to December of 2026. And I think that's just the reality of it. But at the same time, I think we also have to be cognizant of the fact that efficient markets are well-priced markets, right? That are priced on first principal basis. So if you're trading above that, you're actually trading in an inefficient market, and inefficient markets lead to bubbles, lead to credit crunches, lead to lack of liquidity, lead to inefficient investment. And so it's not necessarily a bad thing that, that if the market says the fair value for an investment over this period of time is 60 or 70% discount, it shouldn't be seen as a bad thing. It's just seen that that's just the risk profile that the investor is coming in at.
Yeah. And there are other vectors that negate this inflation, like big time. So like if I think all three of us are of the opinion that there's a lot more money about to flow into Bittensor, and not just in TAO, but into subnets as well, which would then rise that some of the subnets level, so to speak. We've also got a bit of a price floor now that we have deregs. We have a price floor of like 0.001415, etc. So those dereg subnets are gonna start buying their own tokens just to not be dereg. So that minimum price of a subnet is going to slowly increase as some of the subnets goes up. So we have a bit of a bottom there, and then obviously when TAO the price goes up, I mean if TAO doubles, just a double from like $400 to $800, that negates a huge chunk of the alpha inflation.
No,
for your investment. Yeah.
100%. Yeah, no, exactly. And then that's the underlying part, right? Where you have to kind of also understand that that FX price movement, for lack of another better word, where you do have that price volatility of the underlying asset that you're quoting all this in. Which that's part of the risk profile, right? Because on the flip side there's the argument of what if TAO halves, right? And you're an investor that's just deployed fiat into this, so now you've got the inflation of the alpha token, and you've got a high return. Yeah. So that's the balancing figure. I think it all comes down to just risk reward at the end of the day and discount rates.
Yeah. So next topic, what is your opinion? And everyone has a different opinion. What is your opinion on the halving, TAO halving?
Yeah, no, look, I think it's these have been the rules of the road from day dot, right? At the end of the day, I don't really have an opinion on it in the sense of like,
what do you think will happen? Different question.
oh man, I wish I knew. I wouldn't be telling you, I wouldn't be here. I'd just be trading if I knew. But no, I think it's probably going to lead to quite a bit of volatility in the immediate. I think that there's a few dynamics that I'm interested in seeing how it plays out. Naturally, the expectation is that because there's less supply going out of TAO, and just from kind of what we see of the net buys of TAO across the board, that net buy pressure should automatically push the price up, right? If there's less emissions coming out. Inherently, that's one part. But I think that the other part that I'm quite interested in seeing what the mechanics are is especially in the DTAO tokens. From a DTAO token standpoint, you're still emitting the same amount of alpha tokens. That means that there's not necessarily as much TAO getting emitted into the pool to essentially absorb that shock, because the beauty of DTAO is that every block you're essentially widening the liquidity pool, and that just means that you're able to absorb more of price movements in that. You're widening that pool at half the rate now, which means that just in terms of just the root sell pressure, for example, that will already be a sell pressure that will have a bit more impact on the alpha token price
on the thinner subnets.
On the thinner subnets. But I think more if you take it to the example to any subnet, there's going to be a greater price impact now per alpha token emitted than there would have been pre-DTAO. I think honestly it's much more elastic on the smaller subnets than it is on the bigger subnets. But it is still an impact, and I think over time that impact will be seen across the board. I think that's a piece that I'm keen to see which part catches up, because obviously if the TAO price catches up, it's kind of a moot point, just exactly to our earlier point that we just made. But if it doesn't, then there's a risk variable there. Curious to see how this impacts subnets that have much higher costs of compute. I think that's an interesting angle where there might have to be some rethinking on how we fund the compute side of the subnets. I think that there's certain thoughts there that can be explored a bit more on how do we bridge that gap between fiat costs and variable revenues in alpha tokens. But I honestly think it's a good thing for the broader ecosystem. I think reducing supply in general is something where at the end of the day, if the commodity that you're building is good, that naturally just and the demand stays steady, the price naturally goes up, right? So that's what we're all hoping for.
Amazing. Yeah. And do you think that because the liquidity pools are going to be deepening slower for the newer subnets, let's say, or for obviously all of them, but for the newer subnets with already a thin liquidity pool, it's going to mean that volatility is going to be even more exacerbated. So do you see there being a situation where some mini subnets shoot up through the emissions with very little buy pressure, like subnet 115 suddenly went from nothing to like top 10 or something? It was ridiculous. With we're all buying, like zero volume going in.
Yeah, but that's a double-edged sword, right?
Yeah,
At the end of the
it
day.
shows back down fast as well.
Exactly, and at the end of the day, it's something where because of the halving, it now makes it harder to do that strategy where there was a world where right at the start of DTAO, if you really wanted to game the system and you had something like 20,000 TAO, you just go in and just buy day one, get to the point where your pool gets all the emissions, none of the other pools get the emissions, and then you're able to essentially have the deepest liquidity, and then you're gonna absorb those shocks of the sell pressure because you have deeper liquidity to offset that sell pressure shock.
Yeah.
Now,
You just look at the top 10.
yeah, exactly, where they've essentially established a pretty good advantage up there. I think that gets mitigated now with the ability for you to add liquidity to certain subnets that have turned on that feature. That mitigates that risk. But I think that from the post-halving world, the challenge here is that there will be this much more volatility on the smaller subnets, but that cuts both ways. And it really comes down to, I think if you have a really, really good revenue idea and you register a brand new subnet, you could actually have a really good run up the order.
Yeah.
Because if you just say, like, I don't know, like let's say that we figure out a rock, paper, scissors game that everybody loves and we do it with paid in alpha tokens, right? Free subnet idea on revenue search. And you launch that, and then that just generates $1 million from day dot from just degens gambling on it.
Yeah.
Then you can shoot up the order and you can stay there.
Stay there for as long as you want because it's we're all pushing you back. Yeah.
Yeah. So that is a possibility. But at the end of the day, the owner sells, some of the miners sell, the validator, the stakers sell, the root sell pressure. That can make that collapse overnight a lot quicker. So that's the double-edged sword.
And guess what? It brings everything back to the same word, revenue. like Mark and I talk about this all the time. Like everything we do means jack shit if the subnet doesn't make revenue.
I agree.
Yeah. So revenue.
Make money.
Yeah, that is what we're looking for. So in the way that we view this now is we're trying to identify the subnets that are going to have the revenue to support a position towards the top of the leaderboard. And we understand that timescales vary, but our involvement, our capital, our credibility, i.e., when we do an OTC or partnership announcement, that tends to lead to positive price action. But that's for naught if it's not sustainable. So it needs to play into a revenue scenario where, yeah, you've got increased emissions, but that's like a short-term pump. You need to be generating revenue to sustain that position if you want to continue to enjoy the emissions. And there's no value to us as a fund of pumping something up in a month for everyone to rotate out of it the following month, because we're no better off as a fund. As a trader, pumping and dumping is very profitable because you send something up and you profit, and then you send something else up and you profit again. As a fund like ours, where we are holding on to those tokens and everyone can see our wallet and everyone knows that we're holding on to the tokens, it just doesn't work. The metrics are very, very different. And that's why we're searching for revenue. And that's why we are increasingly keen to talk to to subnets about when the revenue is going to flow in, what they're going to do with it when it arrives, and where they're going to be able to sustain their position on the back of that revenue. And I think that Ridges is going to be a bit of a test case here, isn't it, for big real world revenue. There's plenty of subnets that are seeing revenue, but I'm really excited about Ridges over the next few months.
No, they're definitely going to be an exciting one, and I think that they're leading the charge for the whole ecosystem. So it's exciting to see. As my grandfather always said, I'd never be the first man off the landing craft, but they're doing that for us. So I'm really excited and really hoping for all the best there on that side. I think that it's an awesome product, and I'm curious to see how it plays out in the broader world.
Yeah.
And when can we get you back to talk about Cartha properly on a Cartha revenue search?
Oh, we can do that. I'm free, mate. I'm down the road, so you call me whatever, and we can even do one in person next time.
Yeah, dude, you still need to come around. I'll cook you Sunday lunch.
Yeah, I'll come up, dude. I love Norfolk, so I honestly, no, I'll come through.
Amazing. Yeah, come around. But anything else, Mark?
No, it's been interesting. Yeah, I've really enjoyed that. It's nice to see that we're coming to the same conclusions. We're on the same page. When you spend more time in this ecosystem, those are the conclusions that you inevitably draw. And yeah, it's good to continue to and share our experiences, share the lessons that we've learnt on our journey and on your slightly longer journey. Interesting to see where you've got to. Yeah, so I've really enjoyed that. I'll welcome you back on anytime, Victor. That would be a pleasure.
Thank you so much for having me, guys. It's been a pleasure.
Last question, Mark.
Oh, okay. We'll do the question. The question, Victor. As you know, it's key that we pull revenue into this ecosystem, and in revenue search, there's this dual purpose of we're searching for revenue within the subnets, but we're also trying to get eyeballs onto the ecosystem so we can pull more revenue in. And Siam and I are constantly wrestling with the idea that if we were to have guests on from outside this ecosystem, from outside the Bittensor bubble, then we might be able to draw some fresh eyeballs into Bittensor. With that in mind, who do you think that we should try and strong arm, try and coerce, encourage into the hot seat? We've had a lot of support for Barry Silbert with his reach across the ecosystem. What do you think about Barry? Good choice.
Well, I think Barry's a great choice. By all means, I think if you're asking me, I was about to go with a different choice because if everybody else said Barry, the one I'd throw out there is Ejaz from Bankless. I think Ejaz would be So he's been talking about Bitensor on the Bankless podcast for a while. And I think that would be a really, really interesting outsider to bring into the ecosystem because he's been aware of Bitensor. He's been shilling Bitensor to the rest of the Bankless crowd, and I think that would be an interesting one to bridge the gap between us and the rest of Web3 normies.
What is he on X? I can't find.
EJAZ, I believe.
EJAZ. Nice. Sweet.
There we go. We'll add it to the list. We will try and strong arm him on.
But Barry as well. I mean, if you get everybody.
Get everybody.
Lex Friedman. Getting Lex Friedman on will bring like more AI people over at least.
I think honestly, I bring everybody. I think it's something where the more people we talk to outside of the space, and I think especially on the revenue side, the more that we are actually able to generate real revenue, that's how we break out of our own little Bittensor bubble and grow the space. Because when people start using products that they don't even realize is Bittensor on the back, that's the game over point where we win. And I think that what we just need to do is talk more and get more people to understand what we do. And this forum is perfect for it because it is focused on the actual revenue. of the subnets. And I think that that's something that connects a lot more with people than anything associated with miners, validators, or even subnet ownership. Revenue is something that everybody understands. So yeah.
We would love to talk to everybody, but there's not enough hours in the day, unfortunately. We are breaking our own rule today by having a second revenue search this afternoon. We did get to the point where we built this up to we did 3 in one day. I think there was maybe 2 the day before or after. It was too many. But yeah, we're kind of doing one a day at the minute, but we are doing a second one today, but there's no guest. It's just me and Siam. Is that 2:30 UK time, Siam? Is that what time we're on?
Yeah.
Do a little plug for our own. So if you've got questions or topics that you would like to
There's essay questions on that thread already. We have every question.
you got a couple of hours to do that. Siam and I will be back in 2.5 hours time, streaming live. Victor, thank you very, very much for your time and your insights there. They've been really, really useful, really, really valuable. Really enjoyed having you on. Thank you so much.
Thanks so much for having me, guys.
Cheers, buddy.
Bye-bye.
Cheerio, folks.
Sounds fine.